Welcome back, friends. It's been a little while, but here we are again. As you know, I have a motto of trying to only give you videos when I can deliver some value, right? So for the last month, everything's been kind of steady. We haven't had a ton of things going on in the market. The charts haven't told us a lot. And to be quite frank with you, in this type of scenario, I've told you this numerous times if you follow me, the TA is just not as effective here when you have so much going on in the world, right? It can give you good insights for how the market is reacting to those external factors and how the asset's performing as a whole. That's what we're really going to look at. And we're going to take a look at why this does look so bullish right now. And then we're going to compare that to what's going on in the world to decide, is this actually bullish or could something else be going on? Could we see further downside? So let's take a look at everything. We're going to start off with Bitcoin and then jump to Ethereum, EGLD, and Cardano. ETH, EGLD, and Cardano will be pretty quick because, as we know, until DeFi really has a boom, these assets are kind of lacking in liquidity and volume. And when that happens, they're just not moving a lot. All right, so that's kind of getting you started with the framework. This ain't going to be a long video, so we're going to crank through it, all right? Let's do this. So now we're going to start with Bitcoin, right? And when we're looking at Bitcoin, the one thing that I want you to remember, and I've told you this so many times, is this blue area in the middle, okay? That's from like 27.3, I believe. Hang on, let's check it exact, all right? What is the exact level? So it's 26.6 to 28.7, all right? This blue area here, I'm going to zoom in on it now. This blue area is the golden pocket. Now, the golden pocket is a major trend reversal zone. So if we go down to the weekly chart and we look at it in this view, one of the things that you'll notice is when we're in the bull market, we're above the blue area. Once we dropped below that blue area, that's where we've really been struggling in the bear market. Here, we weren't so sure when we were back at 30K. It was definitely a bearish move, but we thought we'd get support. We didn't. We went into this multi-year bear market, okay? So now we're coming out of this bear market, and as we come out of this bear market, we're flirting with this blue area again, this golden pocket area. Now look at how we've interacted with this area throughout this market. When we first jumped up above it, we got a lot of trading in this area. That was from around March the 16th to April the 9th. So that was like almost a month worth of trading until we broke above it. We hit resistance at 31K. This yellow line up above is 31K. So we get the resistance at 31, we reject, we still trade a lot in this golden pocket area. We drop below it into a triangle. So we have this ascending triangle that we touched numerous times. We touched it back in December 2022. We touched it in March 2023. And then when we came down from the golden pocket, we touched it again in July 14th of 2023. Now we see a huge breakout back in June. And when we jump out of that breakout, we are once again hitting resistance at 31K. So we know it's a major resistance area. We've hit it twice. Now when we came down, we got a little bit of support on the golden pocket, which is a good sign because we really didn't see that support here in the prior move to 31K. And now we've dropped back down. We hit this 24 to 25K support zone. This really is a longer support zone. If I extended it out, you would see the support zone hit here too. And we actually hit resistance on that support zone here. So this was a prior resistance at this peak and at this move when we broke out of it, setting itself up for current support. So now we still are expecting support at that 25K level, but we've broken out of the golden pocket. And if you really look, this is the daily chart, right? If you look what's happening here, the moving averages came back down and we broke above the moving averages terrifically. Like we've literally broken all the moving averages on the daily chart. If we look at the weekly chart, what you can see here, hang on, let's zoom in so you can get a better look at it. What you can see here is that we've just broken above the weekly moving averages too. This is an incredibly bullish move, right? When you go to these long-term daily and weekly moving averages and you start breaking above them, it is very indicative of strength. But there is one thing that worries me on this chart, right? And it only worries me because of a pattern, right? I don't have anything to support that this pattern will play out, but you never know with what's going on in the world. So what I want you to take a look at is a little bit of a zoom out here, okay? So if we look at the daily chart in this view, you can see we have one peak to 31K here. We have one move slightly above 31K here, and now we're flirting with 31K again. Well, what happens if this move ends up looking like this? Right? That basically gives you a head and shoulders pattern, a very poorly drawn head and shoulders, but it gives you a head and shoulders, which would indicate a move to the downside as low as this 23K support. Now, is it possible for something like this to happen? Yeah, it's possible. I mean, it could happen, but it's unlikely for this to happen. And the reason I say that is because we have a few things coming up that are very important. The one being what's going on with the SEC and Bitcoin ETF. So if you don't know the real gist of this, what it is that the SEC approved Bitcoin futures ETFs, right? Futures ETFs are also based on the same underlying asset. They're based on Bitcoin. So if you can have a futures ETF based on the asset Bitcoin, right? And this can be completely regulated and approved by the SEC. What does that mean? It means that that underlying asset should be able to have other derivatives that would be approved, right? You should be able to have other ETFs that also use this underlying asset Bitcoin as its asset class. This means that there's really a big hole as to why they've been delaying and why they've not been allowing the conversion of GBTC, which is Grayscale's Bitcoin ETF or Bitcoin fund, into an ETF. It also gives the SEC a lot of, inadequacies in their rejections of all these other ETF applications. Well, what's happened now is that the courts sided with Grayscale. They agreed with the Grayscale that says and the court said the SEC has not provided enough fundamental reason for why they would approve a futures ETF but not a spot ETF. And the SEC is not appealing that decision. So that means that case is closed. They have to start moving forward with getting Grayscale their approval. Now, if they get Grayscale their approval first before all the other ETFs, it gives Grayscale a massive advantage on the market. Technically, is that deserved? In my opinion, I think so. I think Grayscale is the first one to do this. They're the first ones to file for their conversion. Like, they should be the first ones to get the Bitcoin ETF. But that's not really how things work, because then that would be considered a competitive edge or like some favoritism or whatever. It's basically pushing all the liquidity to Grayscale instead of these other ETFs. So what's more than likely going to happen is that they're going to approve multiple ETFs at the same time, and I'm willing to bet BlackRock is going to be in that decision, probably even Fidelity and all these companies. They don't want Grayscale taking all the profits away from these major institutions. So it leaves me skeptical that a head and shoulders pattern is going to play out here. But what we could see that's a little more realistic is resistance at this 31K level, followed by a drop onto the top of this 28.7K level sometime within the next 2 weeks. And then what that would do is put us in a position where we can start putting in a lot of trading on top of the golden pocket. Now, if you look at this a little bit closely, what you can see is this is the area where we haven't had trading. We haven't had a lot of trading on top of the golden pocket. We've had a ton of trading below it and a ton of trading inside it, but not a lot of trading on top. That means that there's not a ton of support yet there's not a ton of built up support and volume on top of the golden pocket. There's a decent amount, but not nearly as much as what's in the golden pocket. I think it's a lot more likely that until an ETF is coming out, we're probably going to see this happen. We're going to start seeing that we're moving past this 26 to 28K level, and we're starting to move into the 29 to 32K level as our major trading zone. So I think that's something to expect. If we were to break past 31K in the next few days, it wouldn't surprise me. We've been having a lot of bullish activity on the asset since we had that fake news of a Bitcoin ETF being approved. The market really saw what's going to happen in the first few hours of a Bitcoin ETF approval, and that was a 7% jump. So now the market has slowly started pricing that in, because I think they're also starting to see that it's very likely that this approval for the spot ETF is going to come in. So keep that in mind. This is a major driving factor. And at the same time, there are a lot of other driving factors. Nothing I've talked about yet even takes into consideration the halving. The Bitcoin halving is in April. So you have this halving come. You probably have a spot ETF approval coming sometime in December or January. That's what's most likely at this point, right? Now, it may not be that. It could be a little different. Let me show you this real quick, just to supplement. Okay, so this is a list of all the deadlines for the SEC to approve the Bitcoin spot ETF applications. And what you can see is that all of the September deadlines have already passed. So that was the first deadline. The second deadlines have pretty much all passed as of like 2 days ago, right? Only Global X Bitcoin fund, theirs doesn't expire until November the 21st. Then the third deadline is going to be towards the end of January. That's when the majority is. And then the final deadline is also a month before the halving, and one of them is during the halving. So pretty much, I think it's almost a guarantee that we're going to see an ETF approval before the halving because, I mean, that's how it works, right? These institutions want to be in the game before the asset spikes up to a new all-time high, and that's what they're doing here. The SEC is more than likely going to be forced to approve something because the courts have sided against the SEC, and the SEC cannot continue to lose their credibility. So keep that in mind. We're probably expecting massive jumps in Bitcoin sometime between now and March at the very latest, now in January at the soonest. So that gives us anywhere from 2 months to 4 months, right? So time is dwindling. What's going to end up happening as time starts running out for this? Well, what you're going to see is appreciation in the asset. The market starts to price it in. Now, other variables that come into play here are what's happening in the world. We don't know exactly what's going to happen with spending. I think at a certain point in time, the US government's going to have to start printing money again. They're going to have to start lowering rates. I mean, that's what you'd assume. I've assumed that for a long time. I think it's even possible, honestly, that they keep rates high, but they keep printing money, right? Almost like QT and QE at the same time, or maybe these higher rates start making themselves the norm. Like 2% interest rates, we might just never see those again. What we might end up seeing is, down to 4% inflation as a baseline or something like that. So keep that in mind. That would still be 50% less than the current inflation rate. These other factors could definitely influence Bitcoin, but as of right now, I'm not seeing anything majorly negative. The only thing that's kind of a thorn in my side all the time is Elizabeth Warren, because she's always so outspokenly negative against crypto and legit understands nothing about it. When you have people like this that have no knowledge, but they have power, their voices are heard by other morons, and then those morons end up making decisions to blindly follow these leaders. So Elizabeth Warren is a variable that could cause problems. I don't know exactly how, but I'm willing to bet she will, because as soon as the SEC started losing all its cases, her voice started becoming louder. She's like, okay, now I got to start speaking against crypto again. So a lot of this, I think, is coordinated in the way people interact. When the SEC is handling it, we don't really see Elizabeth Warren doing too much. And then when the SEC starts to lose, Elizabeth Warren starts speaking up again. Things will happen. The next Speaker of the House is also very likely going to be a pro-Bitcoin candidate. That's what it's looking like. I think that's going to be very beneficial to the asset in the long term. Anyways, for the short term, what you're looking at is 31K resistance. What you're looking at for support is 28.7K support. What you really should want is a lot of trading between 28.7K and 31K before a breakout. I don't want to prematurely break out to like 32 or 33K because it's very likely we're just going to have a sell-off and come back down. But if we get a lot more buyers in this area and put in more volume in this area, it's going to be a more stable support. It's going to be unlikely to see us fall below it. It's also why you have not seen a lot of activity since March of Bitcoin going below that 25K line, because look at the amount of volume support that we've put in there. There's so much volume support there that when the price drops, people are buying it up at this level. I want the same thing to happen here. I want these lines to start coming out to this degree, right? Build up that support baseline so that when we move above it, it's just highly unlikely to come back down. This is how we want to see the chart play out. As of right now, it looks like we could be heading back to that 28.8K level at some point. The daily chart is starting to reach these two red lines, which tend to serve as us being overextended. We also see that the RSI is overextended. You can see that here. So this is very likely. If we go down to the 4-hour chart, the other thing that we notice here is that even on the 4-hour time frame, we've broken through all of the moving averages, but we did go well over those lines that are showing us overextended. Momentum is starting to shift down, so it is possible that the price will come back down at the very least to touch this orange moving average. And basically, if we come down and we touch that 50 exponential, the thing that you're going to see is a good amount of support there. That's what we want to see. Now, even if the price goes down to 28K and we get support in the golden pocket. So let's zoom in so we can look at this a little bit closer, right? So basically, the first thing I said is that we would come down and hit this level. It's our 50 exponential and the top of the golden pocket, and we would start trading in this zone. We would put in a lot more trading in this 31K to 28.8K zone. That's one, right? The other option is that we come down and we touch the bottom of this at the 200 exponential moving average, and then we slowly start to work our way up. This is fine too. As long as we end up having trading in this area, right, in this major zone, right, that 28.8K to 31K zone, that's really all I want to see now. Prematurely moving up, it's not going to do anything. There's so many more variables. We still got so much time to wait. I don't really care if we go to 32 or 33K right now. It would be good for other assets and probably bring some more investors in. But at the very least, setting the foundation is a good thing. Now, one other thing I want to show you on this 4-hour chart, if you look at the volume, we actually went up from 28.2K to 30K with relatively low volume compared to what we had before during that 7% jump. Right? The volume has been fairly stable. So in my eyes here, we've seen a breakout on the charts, but we haven't seen a breakout in volume. So that means the only way this could happen is if the sellers are exhausting and if there are a lot more buyers. So you have a lot more people probably going long on derivatives than they are going short. You have a lot more people holding their Bitcoin than they are selling. And you have a lot more people buying Bitcoin versus putting their Bitcoin on sell orders. All of this combined, very bullish for the market. Overall, we're still seeing massive amounts of Bitcoin leave exchanges. So at this time, I see no reason to be bearish on Bitcoin. I see only reason to dollar cost average and to increase my holding strategy until we get into a point where I want to reduce the buying. I've actually already reduced the buying overall because of other reasons, but that has nothing to do with my aspect on the asset. That just has more to do with the business things I have going on and the free liquidity I have. So that's really what's determining why I'm not buying as much, but I am still buying a good amount of Bitcoin. It's just not as frequent as I was before. The last purchase I made was at around 27K. The next purchase I make will probably be at 28K if we drop below that level again. So for now, I'm just kind of sitting it out and watching, that's how I'm going. All right, so we've done a lot on Bitcoin. That was like a good 16 minutes. Let's jump to ETH, EGLD, and Cardano and wrap it up for the day. So let's jump over to Ethereum. With Ethereum, I told you a while ago that this 1530 level was going to be your major buying zone. I think I told you that when we were sitting up here at around 1630. So if you had some orders at 1530, they would have triggered sometime last week or 2 weeks ago. So I hope you did that. I hope you got to buy some there. The Ethereum chart is looking a little bit more bearish and compared to Bitcoin. It's not really putting in an uptrend like you'd want to see. So I'm not 100% convinced that Ethereum is going to have a massive move up from here. I think we're going to have to see some shift in the market. For right now, your safest bet is to put buy orders at that 1530 level. But based on this trend, right, based on the fact that this is a downtrend and this is an up and this is a downtrend, you're setting a descending channel. When you set a descending channel, you want to look at where that channel could go. So let's take a quick look at where this channel could go. Okay, so if we do this and we do this, right, you really see your descending channel where the majority of the volume is. You drop below that 1530 mark, and then what you're seeing is by the time we get to January of 2024, if DeFi doesn't have a massive boom or Ethereum doesn't get a ton of volume, it could be going down to that 1400 level, and a drop now anytime that's a massive drop is likely going to get support at this level here, which is going to be at around 1500. I think it's pretty clear that this is a descending channel, so keep that in mind. Use this descending channel to pick your buy orders if you want value accumulation. All right, let's move on to EGLD. EGLD is in a very similar situation as what you just saw with Ethereum. Now, what's interesting about EGLD is that we've actually gone below our descending channel and we've been getting support at our major bottom line. You know, I've been looking at this major bottom line for a long time, and I like the fact that I showed it to you back here, but now you can see even all this time later how accurate it's been, right? So charts and levels, planning them, it really does work out because there's a reason I wasn't buying a lot up here because I knew I'd get the chance to buy down here if the market kept going the way it was. So because of that, if I didn't buy too much at $37 and $40, well, that means I'm getting a 50% discount buying more at $23. So that's kind of what I've been doing. I've been accumulating a little bit more EGLD, nothing major, nothing aside of my DCAs. That's why I haven't been posting it on Twitter or anything like that. So now what I'm seeing here is that we definitely have some bullish volume coming out of X day. We see that the daily chart is moving past that 45 level. The key thing I want to see here is how everything else plays out as more people get exposed to all the things happening at X day and all of these all the information that's being put out for people on what's going to happen next. I haven't gotten to watch a lot of the X-Day streams yet. I just haven't had the time, but I'm going to go back and over the week, I'm going to start watching those in the evenings, and I'm going to be catching up on everything that's going on. As I do that, you might get more insights from me on what I think is going to happen. But for right now, I'd be cautious with your purchases. I'd be continuing to set my orders at the 23 level just in case, dollar cost averaging at spot because the price is good at spot, and expecting to see a move up to around the 30 to 32K or $30 to $32 level until you feel that any bullishness has returned, right? We put in a lot of volume resistance at this area. This VPVR volume resistance sits at $24 up to $26. That's like right where we are now. We're right within there. It's difficult to break out of those areas. When you break out of that area, the first thing you want to see is a move up to $30. Now, once we go up to $30, the question is going to be, do we get support there? Do we actually trade at or do we get resistance there? Do we actually trade at the $30 level, or do we shoot past it? If you shoot past it, that's a little more bullish. I would expect a move back down to where we are now, 26, right, to kind of average out. If you see a lot of resistance there, then you're almost certain that you could see a drop back to 23, and that's going to be my decision on where to put my buy orders. For right now, my last purchase was at spot, and it was just a dollar cost average purchase. So I'm fine with that. For right now, nothing else major, no major changes in volume and liquidity and anything to tell me that retail is starting to come back in and we're just going to see all those millions of users come in and shoot the asset up massively. Until we see something like that, I'm not going to give you false hope. For right now, be cautious, accumulate what you can without breaking the bank, and make sure that you're protecting yourself via risk, right? Make sure you have to do your risk management. Our last one, Cardano. Cardano is probably looking the most bearish out of everything that I'm seeing right now, and the only reason for that is it is flirting with this bottom level, and if it drops, the only support I see below it is at this previous descending channel top. So if this previous descending channel top becomes the support, then Cardano is looking to go down to about 15 cents. It's almost a 50% drop from where it is now. There's nothing to suggest that it will make that move. I mean, it could just as easily go up and start trading in the 34-cent level. But here's the problem. I can't take this move to 15 cents out of the equation until I see a move up breaking these moving averages. And you can see right now, we're going to zoom in on this daily. If we look at this daily chart, we have been getting constant resistance on these moving averages and falling below the 20, right? Now we're starting to get constricted here. See this constriction happening? Well, the last time a constriction happened was here, and that's when we had another move down, right? Below the 20 exponential. So what I want to see here, what we need to see, is that the asset breaks above these moving averages and starts trading above the 30-cent level. Until I see that, it is just not feasible for me to be bullish on the asset because this major resistance is not being broken. Right? That means that it's very possible that the buyers will exhaust because we're not seeing enough of them come in right now. And then if your sellers start taking the lead, seeing a drop down in these levels is very, very possible. And I guarantee you this, if Cardano sees 15 cents again, I'm buying, right? So I'll be a buyer at those levels. So in reality, what I want to see is a drop like that because I think Cardano is going to outperform in the next alt season. So if that's going to happen, why would I want to buy at 26 cents when I could buy at 15, right? So I'd much rather see that drop, and whoever panic sells, like, sorry, like that's what happens. If you panic sell, I panic buy. And that's really what I'm looking forward to with Cardano. Whether it's going to happen or not, unsure at this moment. We're going to see if the bears or bulls win, but at the very least, there needs to be a lot of volume between 27 cents and 30 cents before I get confidence that it's bullish. All right, you guys. That's everything for today. I think we went over quite a lot. I hope you enjoyed this update. We'll try to do more, but we're going to do it when it makes sense. I'm not one of these guys that's going to crank out YouTube videos every week just to get views and all that and give you no information, right? If I see something valuable, it'll be there for you. I'll catch you next time. Peace.